Welcome to the Deep Dive. Today, we're really getting into Infosys' latest performance. We've got their recent fact sheets, press releases.
All good stuff.
Exactly. And our mission, as always, is to cut through it all, pull out the key insights for you, give you that clear picture of what really matters.
Yeah, and what's fascinating here isn't just the numbers, though we'll get into those. It's how the strategic moves, the partnerships, how they tell a much richer story.
Totally agree. It's about the why behind the what.
Precisely. Their role in, global digital transformation, it's evolving.
Okay, so let's unpack this then. Starting point, the financials. How do they look for the quarter ending June 30th, 2025? What's the overall picture?
Okay, so top-line revenue. Consolidated, it came in at $4,941 million,
Yep.
which is pretty solid growth, actually, 4.8% year over year, and 4.5% just from the previous quarter.
And in rupees. Sometimes that tells a different story with currency shifts.
Right. In Indian rupees, it was 42,279 crore. That's 7.5% up year over year, 3.3% quarter over quarter.
Got it.
But, the figure I always look closely at is constant currency growth. Takes out the currency fluctuations.
Yeah, it gives you that underlying operational trend.
Exactly. And that was 3.8% year over year and 2.6% quarter over quarter. So decent underlying growth.
Okay, solid top line. What about the bottom line? Profitability, margins, efficiency. How did that stack up?
Well, operating margin landed at 20.8%. Now, that is a slight dip.
Oh.
Yeah, down 0.3% compared to last year and 0.2% from the last quarter. Not huge, but noticeable.
And net profit?
Net profit was $809 million. That's actually up 5.8% year over year, or 6,924 crore, which is up 8.6% year over year.
So profit grew year over year despite the slight margin dip? But how about quarter over quarter?
Good point. Quarter over quarter is actually down slightly, 0.6% in U.S. dollars.
Okay.
And the basic earnings per share, the EPS, that kind of mirrored the net profit, $0.20 per share, up 5.8% year over year, but down that same 0.6% quarter over quarter.
Interesting. So revenue growing, but a bit of pressure on margins and sequential profit. What about cash flow, free cash flow specifically?
Right, FCF. That came in at 7,533 crore. Now, this is where it gets interesting. That's actually down 17.7% compared to the same quarter last year.
Wow. Okay. 17%. Why such a drop when revenue's up?
Well, their FCF conversion was strong, 108.8% of net profit. But yeah, that year-over-year decline.
Yeah,
It does raise a question, doesn't it?
it does.
Often you see this when companies are making big investments, maybe R&D, maybe building out infrastructure for large deals, or sometimes it's just shifts in working capital timing.
So not necessarily a red flag, but something to watch.
Exactly. You'd want to understand the why behind it. Is it fueling future growth? That's the key thing for you to consider.
Makes sense. Okay, let's shift focus a bit. Geographically, where's this money coming from? How do the different regions perform?
Okay, breakdown by geography. North America is still the giant, 56.5% of the total revenue. But the growth there was, well, modest, only 0.5% year over year reported, and 0.4% in constant currency. Pretty flat, really.
Not much growth in their biggest market. Where did the growth come from then?
Europe. Europe was the real engine this quarter. It's 31.5% of their revenue now, and growth was significant.
Now significant.
16.2% year over year reported, and even in constant currency, a strong 12.3%, really driving things.
Wow, okay. Big difference there. What about India and the rest of the world?
India was 9.1% of the total. Growth was basically flat, 0.4% in constant currency. And the rest of the world, which is small at 2.9%, actually saw declines. Down 3.1% reported and 1.0% in constant currency.
So it really is a story of Europe powering the growth this time around.
Yeah, definitely the standout.
Now let's talk clients. This is always crucial for IT services. Are they adding clients? Losing them? What's the mix look like, especially with those high-value accounts?
Right. This is where it gets really interesting, I think. The total number of active clients actually went down slightly.
Oh.
Yeah, just a bit. 1,861 compared to 1,867 a year ago. But, and this is a big but,
Okay.
the number of million-dollar clients went up to 1,011 from 987.
So fewer smaller clients, more bigger ones.
Seems like it. And even the $100 million clients ticked up slightly from 40 to 41.
So consolidating around larger relationships.
Exactly. And check this out. Their large deal wins, the total contract value, or TCV, was a huge $3.8 billion for the quarter.
$3.8 billion. That's massive.
It is. And crucially, 55% of that, more than half, was net new business. not just renewals.
Okay, so if we connect those dots, fewer total clients, but more million-dollar and $100 million ones, plus huge new deal wins.
It points to a clear strategy, doesn't it? Focus on winning those larger, more strategic, potentially higher margin engagements. Even if the overall client count dips a little, it builds a stronger foundation.
Quality over quantity makes
Right there.
strategic sense. But you mentioned before the sources noted some service lines saw declines. Which ones were those?
Yeah, a couple of specific areas faced headwinds. Life sciences, which is about 6.5% of their revenue.
Yeah.
That saw a year-over-year decline of 7.9% in constant currency. And the others category, it's small, 2.7% of total, that declined by a pretty significant 15.3% in constant currency.
So some pockets of weakness even within the overall growth picture.
Definitely. It's never uniform across the board.
Right. Okay, let's pivot now to the innovation side. AI, digital transformation, these seem central. What are some cutting-edge collaborations that really highlight what they're doing, what's delivering real impact?
Yeah, they're definitely leaning heavily into AI and digital. So, for instance, there's a big strategic collaboration with AIB, the bank in Ireland,
Right.
using AI and machine learning to modernize their whole IT setup, aiming for more personalized, agile services, capturing that financial services modernization wave.
Makes sense. Any others?
Yes, they're working with EON, the energy company, on an AI-powered digital workplace transformation across Europe, so hitting the utilities sector too.
Okay, but sometimes AI sounds, well, a bit abstract. Do you have a real aha example? Something tangible where you can see the benefit?
Absolutely. Great example, Americana restaurants.
Okay.
They rolled out AI agents as part of the Infosys accounts payable on cloud solution, and the results. Faster invoice processing, better accuracy, more efficiency, less manual work.
Okay, so AI doing the practical, back office, heavy lifting, clear benefit there.
Exactly. Quantifiable improvement. That's the kind of thing businesses love to see.
No kidding. What about sustainability? That's another huge area everyone's talking about.
Definitely on their radar, too. They worked with Perfection Fresh Australia.
Produce company.
That's the one. Implemented Microsoft Sustainability Manager. It gives them real-time tracking of produce, boosts efficiency, helps with audits, and crucially, cuts down waste. They initially planned it for 4 locations, ended up rolling it out to 17.
Wow, that's a big expansion. Shows it must be working.
Seems so. And they also launched something called the Sustainability Atlas with Economist Impact, basically a resource to help businesses figure out their sustainability journey.
Interesting. And back to banking quickly, you told anything else beyond AIB, next-gen platforms?
Yeah, their Finacle banking suite is still going strong. They've got a strategic collaboration with the Bank of Sydney, powering their digital transformation. And Finacle itself keeps winning awards, for modernizing core banking, improving customer experience. They mentioned specific projects with banks in Egypt, like Alex Bank and others, shows continued leadership in that space.
Right, Finacle's always been a strong point for them. Now, I did see something a bit unexpected in the notes, something about sports technology, tennis.
Yes. Isn't that cool?
Not for different.
Yeah, a 3-year deal with the Lawn Tennis Association, the LTA in the UK.
What are they doing?
Using AI to deliver, deeper match insights, creating more immersive experiences for fans. They mentioned real-time insights for the HSBC Championships.
Huh. Applying AI to sports analytics and fan engagement.
Exactly. It really shows how their digital and AI expertise can stretch into areas way beyond traditional IT. Enhancing fan experiences. It's a neat application.
It really is quite a diverse range of initiatives. All this activity, these partnerships, the awards, it must be getting noticed externally, right? Any key recognitions?
Oh, yeah. Definitely getting accolades. Kantar Brand Z named them a top 100 most valuable global brand, also listed among the most trusted brands in India and the US.
Already high praise.
And then there's the 2025 Asia Executive Team Survey by Extel. They ranked in the top 5 categories: Best CEO, Best IR Team and Program, Best ESG. Quite a sweep.
Impressive. What about workplace culture?
Recognized as a great place to work for 2025-2026 in both India and China. And their BPM unit won awards specifically for supporting women and for learning and development practices.
Good to hear. Any industry analyst recognition, those Everest Group reports?
Yep. Positioned as a leader in multiple Everest Group peak matrix assessments. Those are pretty respected benchmarks, specifically called out for Microsoft Modern Work Services, marketing services, and talent readiness for next-gen apps, hitting key service areas.
Okay, that's a strong list of endorsements.
Yeah.
But for balance, The sources also mentioned some challenges, some headwinds. We should touch on those too.
Absolutely. Important to get the full picture. There was the McCamish cybersecurity incident they had previously disclosed.
Right. Any update there?
Well, a $17.5 million settlement has been preliminarily approved by the court. The good news for them is that $17 million of that is expected to be offset by an insurance payout they're anticipating.
Okay, so mostly covered by insurance.
Mostly. But they do note that any additional costs like potential indemnities or further damages are still indeterminable at this point, so maybe not fully closed.
Got it. Anything else? I think there was something about visas.
Yes, a U.S. Department of Justice investigation related to H-1B visa classification. Again, they state the outcome is indeterminable right now.
Any potential impact?
Their official line is they don't expect it to have a material adverse effect on their financials or operations. But, these things take time to resolve.
Sure.
It just highlights, for you listening, that operating globally means dealing with complex legal and cyber risks, right? Managing these effectively while staying focused on the business is, well, part of the game for companies this size.
A necessary part of operating at that scale. Okay, looking ahead then, how are they planning to manage their capital? Shareholder returns? What's the policy?
They're sticking with their established capital allocation policy. The plan is to return about 85% of their free cash flow to shareholders, cumulatively, over a 5-year period.
85%. That's quite high. How do they do that?
Through a mix of semi-annual dividends and potentially share buybacks or maybe special dividends.
And the regular dividend.
They expect to keep progressively increasing the annual dividend per share, not counting any special ones. So a clear signal of confidence and commitment to shareholder returns.
And financially stable. Any debt concerns?
Nope. As of the end of the quarter, they reported having no debt on the books and just one class of equity shares. Pretty clean balance sheet.
Very clean. And you mentioned strategy. Are they just growing organically, or are acquisitions part of the plan too? Any recent ones worth noting?
Yeah, acquisitions are definitely part of the toolkit. They recently bought MRE Consulting Ltd.
What do they do?
They're a consulting firm focused on the energy sector, and they also bought The Missing Link.
Catchy name.
Isn't it? They're a cybersecurity service provider, so you can see they're using acquisitions to strategically bolster specific capabilities like energy consulting and cybersecurity and strengthen their market presence in those hot areas.
Right, plugging specific gaps or adding key skills quickly.
Exactly, building out the portfolio.
Okay, so wrapping this all up then. For you, our listener, what's the big takeaway? We've seen Infosys balancing pretty solid financials, maybe with a slight margin pressure, but investing heavily in AI, sustainability, winning huge deals, while also dealing with some operational challenges.
Yeah, I think understanding a company like Infosys today isn't just about looking at the P&L statement. It's really about seeing how these massive global players are navigating huge industry shifts.
Like AI everywhere.
Like AI everywhere, exactly. Or the push for real, verifiable sustainability. They're leveraging these new technologies, constantly trying to redefine their value in this, well, rapidly changing digital world.
So a final thought for people to chew on.
Maybe consider this. We see AI transforming IT services, finance, even sports now through that LTA deal. These big trends, AI adoption, sustainability, demand, they're not just buzzwords, right? They're driving real growth, but also real risks. So the provocative thought for you is, what other traditional industries out there might be next in line for this kind of deep AI-driven digital shakeup? And what could that transformation look like for the companies involved?